On May 3rd, China began a new series of state reserve auctions that will continue until the end of August, just prior to the harvest of the 2016 crop. China will regularly auction off the reserves from March to August of each year. The sales of cotton reserves will not occur from September to February, when the new domestic crop harvest is in the market. The Chinese government described the planned auctions as gradual and well organized until the reserves reach a reasonable level. However, there's been no firm indication of what constitutes a reasonable level. China will follow a strategy to mainly auction off current reserves and moderately refill new reserves with high-quality cotton. The Chinese government set a cap for the 2016 daily auction amounts at 138,000 bales, and the total amount sold from May 3rd to August 31st, 2016 will not exceed 9.2 million bales. In 2017, the daily cap will be set at 230,000 bales. The reserve cotton will be graded by the China Fiber Inspection Bureau before being sold, since many have questioned the quality of the reserve cotton. According to the auction plan, the price will be based off of a combination of the latest domestic, Chinese, and world market prices. The prices will be correlated with the market and updated each week. The first week of the current auction series has now been completed. During the first 3 days of the auctions, the total sales volume exceeded reserve sales during the entire auction period last year. The majority of the cotton sold during this past week was imported cotton from the U.S. and Australia. The base price for the first week's auction was settled at 84 cents per pound. The average price during the 3-day period was 87 cents per pound. The highest price recorded for the imported cotton was close to $1 a pound. In comparison, the average trading price of both imported and domestic reserve cotton is below current spot prices. During the previous auction period in 2015, prices were higher and ranged from 97 to 111 cents per pound, which resulted in limited sales. During the 3-day period from May 3rd to May 5th, 413,000 bales were sold, with 330,000 bales of imported cotton and 83,000 bales of domestic cotton. The reasons behind this are attributed to the current lower inventory of textile companies, lower auction base price, and limited availability of higher quality imported cotton. Since the auctions began later than expected this year, many mills have allowed their supplies to drop and have actively bid for the imported cotton. The expectation is that the supplies of higher quality imported cotton will be quickly consumed by mills. It is too early to make any predictions based on the early auction results due to the short supplies held by mills and the predominance of imported cotton in the early auctions. Looking ahead, some key factors to watch include: what discounts will be applied to the base price given the age and quality of the cotton? Will the auctions encourage more mill use? Chinese cotton mill use has been declining, mostly due to lower-priced man-made fiber. In recent months, the price gap between China's internal cotton price and the price of man-made fiber has narrowed. The availability of lower-priced reserve cotton could increase cotton use by mills. In their initial estimates for the 2016-17 marketing year, USDA is projecting China's mill use to increase by 1 million bales. Another key question is, will the auctions displace yarn imports? In the past few years, China has dramatically reduced cotton imports and is assumed to restrict 2016 imports to the required WTO minimum tariff rate quota. However, while China's raw cotton imports have been declining since 2011, China's yarn imports have steadily increased since yarn imports are not subject to quota restrictions. Since 2010, China has steadily increased yarn imports from India, Pakistan, and Vietnam. Another key question is, what is the longer-term target level of stocks? China has announced a plan to gradually reduce stocks to a reasonable level in the longer term. Therefore, it is very conceivable that excessive Chinese stocks will still impact the market for several years. And lastly, will auction purchases be limited to mills, or will traders be eligible to purchase and/or export? Although not expected to happen, should China allow exports of the reserve cotton, the impact on world prices would be larger. To date, the current auctions have not brought any surprises to the market, but we will continue to monitor the situation.